Welcome back to the deep dive. Today we're going to be looking at Occidental Petroleum.
Mm.
You sent over their fourth quarter 2024 earnings report and some other really interesting financial documents, so thanks for those. We're going to be breaking down some of the key takeaways from this stuff and hopefully unearth some surprises along the way.
Sounds like we're going to be doing some financial archaeology.
I like that.
Oh?
And speaking of unearthing interesting tidbits, the first thing that kind of jumped out at me was this net loss of $297 million that they reported for Q4. But then, like a few lines down, they've got an adjusted income of $792 million. So
Yeah.
how do we make sense of that?
Yeah, well, that $1.1 billion environmental liability that they reported, that's the big difference maker there.
Right,
It
right,
stems from that recent federal court ruling, you remember.
right, of course. But I mean, that ruling covers events that happened quite a while ago. So why is it impacting their financials now?
Well, this ruling basically forced Occidental to recognize the full cost of this liability all at once, even though the actual expenditures are going to be spread out over the next 10 to 20 years.
Oh.
It's kind of like getting a massive bill for like a home renovation project all at once, even though the work's going to be done in stages.
Right. Okay, that makes sense. But it also raises the question of how does this liability compare to those faced by some of the other big players in the energy sector? Is this a sign of things to come for the industry as a whole, or is Occidental kind of an outlier here?
That's a really good question. And it highlights this, increasing pressure that energy companies are facing to address this environmental legacy. And while the size of this particular liability might be unique to Occidental, this underlying issue, like environmental regulations and their potential financial impact, it's something that the whole industry needs to grapple with. This could be a defining factor in shaping the sector's long-term strategy.
For sure, for sure. This is much bigger than just one quarter's earnings because
Yeah.
you've got this big liability. But they also announced a 9% dividend increase to 24 cents per share. I mean, are those two things at odds with each other?
Yeah, it's an interesting juxtaposition for sure. I mean, increase in dividends typically signals confidence in future profitability. So it suggests that Occidental believes they can generate enough cash flow to cover this liability and still reward their investors.
So is that a sign of strength then, or are they maybe being overly optimistic?
Well, they have been very aggressively pursuing deleveraging,
Yeah.
reducing their debt. In fact, they've already achieved their near-term debt repayment target of $4.5 billion.
Wow.
And they've announced another $1.2 billion in divestitures for the first quarter of 2025. So this really suggests a commitment to strengthening their financial foundation.
But by selling off assets, are they potentially jeopardizing their future production capacity? Could this impact their long-term growth?
Yeah, it's a valid concern. However, we need to look at, which assets they're selling. Are they divesting from less profitable or strategically less important operations? This could actually be a really savvy move to streamline their portfolio and focus on their core, high-performing assets. It's all about making those strategic choices to maximize value.
Right. That makes a lot of sense. So let's talk about those core assets. Operationally, how did they perform in Q4?
They had a really strong quarter. They generated $3.6 billion in operating cash flow.
Okay.
And they exceeded their production guidance with a total of 1,463 MBOE. That's 1,000 barrels of oil equivalent per day. Their Permian Basin and Rockies operations are really the powerhouses behind this success.
That raises a really crucial question. How sustainable is this production growth? Can they maintain this momentum, or are they tapping into reserves that are difficult and costly to replace?
Well, their worldwide proved reserves currently stand at a pretty substantial 4.6 billion BOE. Not only that, they achieved a really remarkable 230% reserves replacement all in, and 112% organically.
Wow, that's impressive. But to be clear, all in means that they're factoring in acquisitions, right? What's the story behind that organic replacement number? Are they making significant new discoveries?
Yeah, their strategic acquisitions, especially that Crown Rock deal, contributed a lot to their reserves. But what's really encouraging is that organic replacement number. It tells us they're not just relying on acquisitions, they're actively finding and developing new resources, primarily in that prolific Permian Basin. This speaks volumes about their ability to sustain production in the long run.
So it seems like they're doing well in their core oil and gas business. But what about Oxy Q4, their chemical subsidiary? How did they fare in this unpredictable market?
Well, interestingly enough, Oxy Q4 actually exceeded their income guidance for the quarter. Despite headwinds like lower PVC price and seasonal dips in demand, the report mentioned something called advantageous commercial thresholds being triggered. That kind of piqued my interest because it could point towards strategic pricing adjustments or some innovative cost optimization strategies they're employing definitely something worth looking into.
Yeah, agreed. Now, we can't forget about their midstream and marketing segment.
Yeah.
Did they manage to keep pace with the rest of the business?
They did. In fact, they exceeded income expectations, despite some derivative losses.
Okay.
It seems like their investment in Western midstream partners continues to provide steady returns. They're clearly benefiting from WES's robust network of pipelines and processing facilities, which are essential for getting their product to market.
Makes sense.
Yeah.
Now, before we move on, I wanted to touch on something I noticed throughout the report. That's the frequent use of non-GAAP financial measures, like adjusted income. And yeah, these adjusted figures always make me a little wary. Should we be concerned about this?
Yeah, it's good to be cautious. I mean, while companies often argue that these non-GAAP metrics provide a clearer picture of their underlying performance, it's important to remember that these measures aren't subject to the same stringent accounting rules as GAAP.
So how should we, as non-accountants, try to make sense of all these different figures?
I think the key is to compare the non-GAAP numbers with their GAAP counterparts.
Okay.
Look for any significant discrepancies and try to understand why those adjustments were made. You know, it's about digging a little deeper and not taking everything at face value.
Transparency is key, especially in the energy sector. Speaking of transparency, I couldn't help but notice all the forward-looking statements sprinkled throughout this report.
Ah, yes, predictions about the future.
Right.
Always worth remembering that those are inherently uncertain, particularly in an industry as volatile as energy.
There are so many factors that could throw their projections off course. I mean, where do we even begin?
Well, geopolitics is a major wild card. Think OPEC decisions, the ongoing conflict in Ukraine, any other unforeseen global event. Then you've got this ever-evolving landscape of environmental regulations. As we've seen with that $1.1 billion liability, regulatory shifts can have a massive impact on profitability.
And of course, the global economy is always a factor. A recession, sudden inflation, a spike in interest rates, all of that could significantly impact energy demand.
Absolutely. And let's not forget about the increase in threat of cyber attacks, which could disrupt operations and supply chains, or even another pandemic, which could, trigger global economic turmoil.
So what does this all mean for Occidental? It sounds like they're navigating a minefield out there.
In many ways they are. But despite these challenges, they are taking strategic steps to position themselves for the future. They're focusing on deleveraging, they're investing in their core assets, and they're even exploring new opportunities in carbon management.
And that's where we'll pick up in the next part of our deep dive. We're back and ready to dig into Occidental's foray into carbon management with their Oxy Low Carbon Ventures subsidiary. It seems like kind of a paradox. You've got an oil and gas giant going green. Is this a genuine shift towards sustainability, or is it just some clever PR in the face of all these growing climate concerns?
It's a question a lot of people are asking, and it's really hard to tell what their true motives are. But their investments in this area are definitely substantial. I mean, they're not just dabbling, they're developing technologies for carbon capture and storage, they're exploring direct air capture, they're even researching ways to use captured CO2 for enhanced oil recovery.
Using CO2 to extract more oil, that seems a little counterintuitive.
Yeah.
How do they reconcile that with their sustainability goals?
Well, their argument is that it's about producing oil with a smaller carbon footprint.
Okay.
By capturing and storing the CO2 that would normally be released, they're trying to create this closed-loop system, kind of like recycling on an industrial scale. But for carbon...
I see their point.
Maybe
But some might call this greenwashing, making their operations seem environmentally friendly while they're still profiting from fossil fuels. So how do we differentiate between genuine efforts and just, strategic marketing?
Well, that's really the heart of the debate surrounding carbon capture and Occidental's role in it. Critics argue that it's just a way to prolong the use of fossil fuels and delay this inevitable transition to renewable energy sources.
Right.
Others see it as kind of a necessary bridge, acknowledging that the world still relies very heavily on oil and gas, and that any effort to reduce emissions during this transition is beneficial.
So it really boils down to a difference in perspective on the urgency of the energy transition.
Yeah.
Occidental claims they're committed to, quote, economically grow our business while reducing emissions, end quote. But can those two objectives really coexist, or will one inevitably undermine the other?
That's the multi-billion-dollar question, and one that only time will tell. It's a balancing act, and investors and the public are going to be scrutinizing their actions very closely. I mean, the success or failure of these carbon management initiatives will impact not just their bottom line, but also their reputation and their legacy.
Actions speak louder than words, for sure. Earlier, you mentioned their impressive reserve replacement numbers. 230% all in, and 112% organically. Just to refresh my memory.
Well, reserve replacement is a really vital indicator of an oil and gas company's long-term health.
Okay.
It's the ratio of reserves added to reserves produced.
Mhm.
So a rate above 100% means that they're finding and developing new resources faster than they're depleting the existing ones,
Mhm.
which is absolutely crucial for sustained production.
So they're essentially future-proofing their business.
Precisely. And that 112% organic replacement, that's particularly noteworthy. It shows their ability to grow their reserves through exploration and development, not just acquisitions. I mean, a lot of companies struggle to even achieve 100% organic replacement. So Occidental's performance is really quite remarkable.
It seems like they're excelling at both ends of the spectrum. They're securing future production while also investing in carbon reduction.
Mm.
But isn't there an inherent tension there? How can they justify expanding oil and gas reserves while at the same time pushing this decarbonization agenda?
It's a contradiction a lot of people find difficult to reconcile.
Yeah.
On the one hand, you've got their reserve replacement figures, which paint a picture of a company that's deeply invested in fossil fuels, poised for continued growth in that area. And then on the other hand, you have their carbon management initiatives,
Right.
which signal this commitment to mitigating the environmental impact of that very same business.
It's almost like two separate narratives kind of woven together.
Yeah.
Are they trying to appease both sides of this energy debate, or is there a more unified strategy at play here?
It's a puzzle with pieces that just don't seem to fit neatly together. Maybe they're hedging their bets. They're aware that the future of energy is uncertain. Maybe they believe they can play a role in bridging this gap between fossil fuels and renewable energy.
It's definitely a complex situation with no easy answers.
Yeah.
But it raises the question, can a company really be a leader in both worlds, or will they ultimately have to choose a side?
That's a question a lot of people are grappling with, not just within Occidental, but across the entire energy sector. I mean, investors, policymakers, the public, they're all watching to see how this unfolds. And Occidental's choices will have ripple effects beyond their own operations, influencing the direction of the industry and maybe even impacting the global energy transition.
And this kind of leads us to another intriguing element of their sustainability strategy, and that is their involvement in the world of carbon offsets. It's a topic that's fraught with controversy and complexities, and one that definitely deserves closer examination.
Indeed. Carbon offsets represent this market-based approach to tackling climate change.
Hmm.
But their effectiveness and legitimacy are often questioned. It's a very nuanced area, and one that requires a pretty critical lens to fully understand.
Sounds like we're about to navigate another fascinating layer of this deep dive. Let's jump right in.
Okay, so we're wrapping up our deep dive into Occidental Petroleum by exploring this whole world of carbon offsets. It's a market-based approach to addressing climate change, but it seems like there's a lot of debate surrounding it. What's the basic idea behind these carbon offsets, and why are they so controversial?
Well, the fundamental concept is that companies can basically compensate for their emissions by investing in projects that either reduce or remove CO2 from the atmosphere.
Yeah.
It's actually, they're trying to balance the scales, so to speak.
So is it kind of like a get-out-of-jail-free card for polluters? If a company emits a ton of CO2, can they just pay someone else to plant a bunch of trees and call it even?
Well, it's not quite that simple.
The premise is that the location of the emissions reduction doesn't really matter, as long as the overall reduction occurs. So hypothetically, a company in Texas could offset its emissions by funding a reforestation project in Brazil.
I can see how that would be appealing to companies looking for a relatively easy way to address their carbon footprint. But what are some of the criticisms that are leveled against these carbon offsets?
Well, one of the main concerns is making sure that these projects actually deliver the emissions reductions that they promise.
Mm-hmm.
There's a risk of what they call leakage, where emissions are just shifted from one place to another,
Right.
or the projects might not be adequately monitored and verified.
So accountability is a big issue. How do we even know if these projects are actually having a meaningful impact? Or if it's just a way for companies to greenwash their image?
Exactly. And then there are also concerns about the permanence of these carbon offsets. What happens if a forest that was planted to sequester carbon is later destroyed by a wildfire or deforestation? Those sequestered emissions are going to be released right back into the atmosphere, effectively negating the offset.
It seems like there's a lot of potential pitfalls and uncertainties surrounding carbon offsets. So, given these concerns, how should we be evaluating the company's carbon offset and strategy? What are the red flags we should be looking out for?
Transparency is key. Are they invested in high-quality, verifiable projects
Mm-hmm.
with robust monitoring and verification mechanisms in place? Are they open about their offsetting practices and the methodologies they use to calculate these emissions reductions? And I think maybe most importantly, are they using offsets as a complement to direct emissions reductions, not a substitute, within their own operations?
So it's about looking beyond the headlines and really scrutinizing the details. What's Occidental's track record in this area? Have they been engaging in meaningful carbon offsetting, or are they just paying lip service to the concept?
Well, they've certainly been very vocal about their commitment to carbon offsets.
Okay.
And they've invested in a really diverse portfolio of projects, everything from reforestation and improved forest management to initiatives that capture methane from landfills.
Landfill methane capture. That's interesting. Can you elaborate on that a little bit?
Sure, landfills are a major source of methane emissions,
Hmm.
which is a really potent greenhouse gas. So capturing and utilizing that methane can not only reduce emissions, but it can also generate renewable energy.
Okay.
So it's a win-win.
That makes sense. So they're not just focusing on planting trees, they're exploring a variety of different approaches.
Yeah.
But how do we know if these projects are actually making a difference? Is there any way to really assess their real-world impact?
Honestly, even for experts, evaluating the true impact of these carbon offset projects can be really difficult.
Yeah.
The methodologies for calculating emissions reductions can vary quite a bit, and there's always going to be a degree of uncertainty with these estimations.
So it's almost like trying to measure the weight of smoke.
In some ways, yeah, but that doesn't necessarily mean that carbon offsets are useless or inherently flawed. It just underscores the need for caution, critical analysis and rigorous questioning. I think we need to demand transparency, hold companies accountable, and just seek evidence that these projects are truly delivering measurable emissions reductions.
So as we wrap up this deep dive into Occidental Petroleum,
Yeah.
what are the key takeaways for our listeners? What should they be keeping in mind as they navigate this really complex and ever-evolving energy landscape?
Well, the energy industry is definitely in transition. There's no doubt about that. This shift towards a lower carbon future is underway. But it's a gradual process with a lot of hurdles along the way. Companies like Occidental are right in the middle of this transition, and their choices are going to have really far-reaching consequences for all of us.
So even if we're not directly invested in the energy sector, it's something that we should all be paying attention to.
Absolutely. I mean, the decisions these companies make are going to influence our energy supply, our economy, and the global efforts to address climate change. So it's really important to stay informed, engage in these thoughtful discussions, and just demand accountability from those who are shaping the future of energy.
Well said. And on that note, a huge thank you to you for joining us on this deep dive. We've explored Occidental Petroleum's financial performance, their strategic decisions, and their efforts to navigate this very complex and ever-changing energy landscape. It's been quite a journey.
The pleasure was all mine. And remember, the learning never stops. Keep asking questions, keep exploring, and keep diving deep into the intricacies of the world around us.